Well, good afternoon, everybody. This is Ken Winans and Stephanie Larson from Winans Investments. And as promised, we wanted to give you a post-earnings season, start of the year video to talk about all the things going on. And I think I mentioned in the last video that 2021 was certainly going to have its own set of challenges. Certainly, COVID is still very much in the news, and we're all still dealing with the changes in our lifestyles. But let me jump into the markets because I think this is important. First off, earnings season was largely not bad. There were some companies that had some bad misses. Good news is we didn't own a lot of them. It's always a good thing. But anyway, so we're happy to report that most of our companies did okay. But as many of you know, I'm a very big believer in the January effect, or January barometer, as we call it, which is that January can set the tone for the rest of the year. And there was obviously a lot of stuff that happened this last month, or that we were dealing with, but January basically closed mixed to low, which tells me that this year is going to be very much a stock picking kind of year. If you make money, it's in particular areas, but the overall market, I don't expect it to be all that great. There's some other things that I would also add. In the industry shift, there's a lot of companies that did very, very well last year, and very clearly, even though they had good earnings, there was profit taking in those stocks. So very clearly, things are shifting, and we will be making adjustments to your portfolio as we go through the remainder of the year. I would just say that, again, if we see deterioration in the markets, we are an active manager. We will raise cash. We will place hedges in the portfolio. We're monitoring it all the time. And so, we're prepared for whatever comes on. But like I sent Stephanie a text message early this morning saying, game on. Mm-hmm. So that's how we feel. It's game on. So Stephanie, what else do you want to add?
Well, I know part of the concern with clients is that, volatility has picked up. So a lot of people are concerned, what are we doing? We did what we said we were going to do. We wanted to wait to get into earnings seasons before we made any wholesale adjustments to the portfolio. We will obviously be making those adjustments to the portfolios in the near term now that we know where we want to go and our research is up to date. We've had a risk investment committee meeting where we discussed how we want to hedge the portfolios if we need to, if this volatility picks up. In reality, the shocks to the market lately haven't been a lot. It's not like it was in November where there was a sharp pull down. It's just, part of what's going on is it's the stuff with the Robinhood and the Reddit and the GameStop and what's been happening. Investors don't like uncertainty. So what that did is it triggered a wave of concern among portfolio managers and money managers, just kind of like, oh, are they going to come after one of our names next? And so people have been taking profits and they've been doing what they've been doing in the market. But the volatility, you saw Apple pull down really strongly on Friday, almost 4%, and they had great earnings. So it had nothing to do with fundamentals. It really just had to do with an emotional reaction to what's going on. And in that instance, we have had some clients that have asked about what actually happened with GameStop. I know there's a lot of news out there. You can definitely Google it and find a million articles about it. But the Cliff Notes version from us is that the shorting of stocks is public information. So if you're a hedge fund and you short something, over 100%, which unbelievably they're allowed to do, these retail investors that were a part of Robinhood and they were communicating on Reddit. Robinhood is just like an E-Trade. It's a no-fee transaction E-Trade essentially. And what these guys did on Reddit was they talked it up and said, hey, these stocks are shorted. Let's pump up the price, and then the hedge funds are going to have what's called a short squeeze. They're going to have to come and buy the stocks and cover their positions, and the price is just going to keep going through the roof. Well, they pulled it off. And there's people that made a fortune. There are people that lost a lot of money. Investors that wanted to get on the bandwagon got on. Maybe they got on the right day. Maybe they got on the wrong day. And it's a real risky play because, we had some clients that called and said, hey, are you going to, these things are going up 100%, so you participating? It is wholly inappropriate to have those kinds of gambles in our general client portfolio. You get in on the wrong day. These were minute by minute 120, 140, 150% moves from one day to the next in these stocks. It is literally, you're going to Vegas and you're gambling. And we would not gamble in that way. I mean, it's fun to look at and you're kind of like, oh, I want to participate in that. I want 100% in 24 hours. But, no one knows what's really going on. No one knows who's pushing the buttons and pulling the strings. You had Robinhood, stop the stock. I mean, literally they halted a couple of times because of the volatility, and then Robinhood itself, this E-Trade company, they are just like us when it comes to the requirements of the SEC and FINRA, and they didn't have the capitalization. So all of a sudden they have to give cash to these clients that made millions, and they didn't have the money to do it. So they had to go back to their venture capital investors and ask for money. They got $100 million overnight because they couldn't settle the trades. And that's just unbelievable. So now they've limited it where you can only sell one share at a time. Well, that's not fair. What if you're stuck in the stock and you own 1,000 shares of it and it's at the price you like, and they literally won't let you sell it more than one at a time? So, this is a real risky situation. The SEC is getting involved. They're looking at it. They're going to check to see insider trading, anything people are doing. They're going to get into Reddit and see what they're doing. And people are going to have some head rolls. There's no way around this. But it's not technically illegal. So maybe they want to turn their direction at another stock and pick on that one. Who knows? That's why this is so fascinating. And everybody in our industry has been watching it going, what is going on here? And it's been fun. 2021 started very interesting. So we're just continuing. And that's really the short end of the conversation is that, the hedge funds had a short squeeze put on them. They came into the market. It's very volatile. We don't know when it's going to stop, if it's going to stop anytime soon. Robinhood, which actually wanted to IPO soon, no one knows what's going to happen with them. It's a fascinating time. And at the same time, there's earnings, there's a new administration, COVID's still happening. So
Federal Reserve.
The Federal Reserve, so
Well,
it's been fun.
Folks behind us are books that were written back in the 1800s, and I can show you copies of these same kind of games being played by your great and great great grandparents, for those of you who were here then. I can also say that I was around during the dot-com boom and bust of the late 90s when you had, I was telling Stephanie earlier, I remember when Pets.com ran these very expensive ads in the Super Bowl and the company was out of business 4 or 5 months later. So at the end of the day, look, the markets are, as I say, they're imperfect gauges of things. And there are times when things get played around. But anyway, the point being, feel free to call and ask us about these things, but those are just not the types of situations that we get into or choose to play. For many of you I was involved in the commodity markets back in Chicago, and there were lots of stories of things that happened back then. So you cannot regulate greed, and you certainly cannot try to make stupidity a way of gauging things. And unfortunately, a lot of people who bought at the top rode down. Yeah. One other quick thing. I get asked a lot about Bitcoin. Okay, we had the same situation. I remember when Bitcoin came out, 4 years ago, ran up, blew up, did nothing for years, and now it's rallying again. Look, I have absolutely no doubt that blockchain technologies are going to revolutionize some areas. I particularly think it's going to change the real estate market and the way we do transactions in real estate. But same thing is when something's already had a massive run up and it is unconventional, I just caution people to be careful. Yeah. Things can go wrong, and and certainly when you've had this overall stock market now at 33,000 on the Dow Industrial Average, this is not a cheap marketplace any longer, and you have things like that. And if we do have a bear market, those other areas will get creamed. I've seen it too many times. So we've been a little long-winded here. Please feel free to call us. I hope you were happy with your year-end results. We are going to be making changes to the portfolios as we talked about, and we hope you're all doing well.
I also wanted to just mention that if you guys are playing the game with those stocks, the GameStops, the BlackBerries, the AMC or whatnot, just be really careful, real cautious in your actions there. Don't don't bet your house on it, and know that you could get stuck. So if you are playing that game with those stocks, just be judicious about it, okay? Yeah, that's our advice to you. Just be careful.
Or as the Romans would have told you, caveat emptor, let the buyer beware.
Yeah.
So,
Nick, take care. We'll circle around next month and let you guys know. Keep your eye on your portfolios, and we'll be in touch soon.
bye-bye, everybody.
Bye, guys.